Very good morning, friends. At the outset, let me welcome each and every one of you for the fast track webinar series BIndAS. It is 6th batch, and we are in day 3 of ICAI certificate course on Indian accounting standard, exclusively for appearing for assessment test exam. Today, we will be seeing two very interesting standards. One is on Indian Accounting Standard 20, accounting for government grants and disclosure of government assistance. Another one, we will be taking you through property, plant and equipment, which is on IndAS 16. So these are the two standards we'll be discussing today. So let me directly go to the subject. I'm sure all of you are already aware about the Pinnacle case study sessions which has been announced. Anyhow, it will be shared to you, all of you, those who are in the group, and also those who are interested. You can get in touch with the coordinator, Mr. Venkatesh. Good. Let me bring before you some very interesting facts about 20. And I'm sure we will never forget the year 2020. So which is a pandemic year. And they say perfect eyesight means 20 feet. Okay, so 20 feet for left and 20 feet for right. So that will be what we call it as 2020, which is a perfect eyesight. And 20 also called as a score. And in China, the wedding anniversary, 20th wedding anniversary, they have named it as China anniversary. But I don't know what is the meaning for it, but it is named as China anniversary. And today the most popular cricket match is 2020 match. And in India, the smart cities, there are totally 100 smart cities are announced. The first round of smart cities is 20 smart cities. So 20 is a very unique number. And there are many things which you can connect to government. And maybe smart cities is one thing which you can directly connect to government. Good. So let me now take you directly to the standard. So this is your IndAS 20. It is a very simple standard, but there are certain uniqueness with respect to the standard compared to the other Indian accounting standard. It is very special. If you look at the name, they mention accounting for government grants. So let me give the breakup to you. It is accounting for government grants and disclosure of government assistance. So that means government assistance is not accounted, it is not recognized, it is only disclosed. But government grant, please, we need to appreciate the distinction between government assistance and grants. Assistance has to be disclosed, grant has to be measured, recognized, and also to be disclosed. So this is where the uniqueness is. So then what is government? What is government assistance? What is government grant? So let me take you to that particular question. And this standard has definition starting from para 3. It will also go up to para 6. Actually, para 3 to 6 are all definitions only. I'll just share with you some quite interesting term here. Look at this. Government grants are sometimes called by various names also. Subsidies, subvention, interest subvention, especially for various loans, where instead of giving a waiver, there will be an interest subvention that will be given, and the chartered accountants have to certify the interest subvention portion during their bank audit, annual bank audit. Premiums, these are all various names. So let me first start with the term called government. And already we have discussed this in yesterday's session also in IndAS 41. So same, these definitions are same. So government refers to government. It means central and state. Okay. Government agencies. Yesterday I gave a very big list of government agencies. So every ministry, they have a government agency and they are also government. But remember, government company is not government because they are called government related entity or owned entity. So government is different from government company. And similar bodies, whether it is local, state government, national, central government, or international. So even international, okay, government is also coming within the term called government. So now let me take you to this first question. So government refers to what? Is it only central government? Is it only state government? Is it government and government companies? That is wrong. Because central and state government is also government. International is also government. So local, national, international, it refers to government, which is central and state. Government agencies, a very big list is there. So once again, let me show you that particular list. So who are all the government agencies? Okay. So these are all the government agencies in India. So it's a very big list. So please look at this list of agencies of government. So every ministry they have. So whether it can be all these autonomous bodies, Ministry of Culture, please look, Archaeological Survey of India. So this is actually a government agency. All are funded. And wherever the government funding is there, you have a C&DG audit is there. Asiatic Society. Okay. So we have with respect to the Ministry of Environment and Forest. Look at this various bodies. These are all agencies of government. Wildlife Institute of India. So this is an institution coming under the Ministry of Environment. So all these are government agencies and similar bodies. So that is why you have various names here. Autonomous bodies, subordinate bodies, statutory bodies. Okay. So statutory body is one whether they will become a government or not. For example, Institute of Chartered Accountants of India is a statutory body. But whether they are government, okay, so it's a fundamental question. So, and for your information, statutory bodies, they are given autonomy status, and there are certain statutory bodies funding is done by government. Certain statutory bodies no funding by government. Okay, for example, Security Exchange Board of India. So it is a statutory body. It is not a government agency, but funding is done by government. Institute of Chartered Accountants of India, it is a statutory body, no funding by government. So therefore, the term government will come with respect to statutory body only when there is a funding. So these things, there is no explanation in your IndAS. So there are practical relevance to it when we come for any question like this. Okay. So answer for question number 1, government agencies and similar bodies. Good. Come to next question. Which of the following is not specifically excluded from the purview of IndAS 20? Not specifically excluded from the purview of IndAS 20. So what I'll do, I'll take you to the scope. So please look at the scope. This standard does not deal with. Actually, if you look at the scope, this standard shall be applied. Now I'll just share with you the scope here. Look at the scope. This standard shall be applied in accounting for disclosure of government grants and in disclosure of other forms of government assistance. Government grant should be accounted and disclosure, and government assistance must disclosure. There is no. So please look at this word: accounting and disclosure of government grants. But with respect to government assistance, it is only disclosure. That is why this blue color, this is red color. Accounting and disclosure is only disclosure. So we'll come for the distinction. Now please come here. Please look at the government participation, the ownership of entity. This is where there are certain opinions I have given. The statutory body, is it government? So the standard does not deal with government participation, the ownership of equity. So that means government company. So government, you have a separate exclusion. This is a classic example where government participation, the ownership of the entity, where it excludes government company, because the list doesn't say whether it will be included or excluded. Here only it will come. So the standard does not deal with special problems arising in accounting for government grants, reflecting the effects of changing prices or supplementary information of a similar nature. So especially index prices. Government assistance that is provided for an entity in the form of benefits like tax profits or tax loss, and examples are income tax holidays, tax credits, accelerated depreciation. These are not government assistance. Oh, then what is government assistance? So they have first given a clarity. So what is not a government assistance? Government company, government grant covered in IndAS 41 agriculture. Because when you go to 41, it will say other than this, go to IndAS 20. Now, when you come to IndAS 20, please understand in agriculture, what type of grant they will give? What type of grant? Especially, there can be grant in the form of land can be given. Okay, so asset can be given. You do the agriculture and give me the produce. So how the accounting has to be done? There can be other form of grant. There can be manium. There can be in the form of one lump sum amount. And you have to make up with that particular government grant. And then you have to start being self-sufficient and sustainable with that particular grant. So a capital grant or a non-capital grant. So we call it a revenue grant. So, and with respect to produce. So sometimes the grant will be in the form of one-time, I will call it as one-time produce. You use this produce, like for example, in the form of giving the seeds. That also will be government grant. So we need to clearly appreciate the distinction between 41 and 20. I'll bring certain examples to you. So once we finish the definition of the government assistance and government grant. So now I'll take you to one more paragraph. Please look at para number 10. Forgivable loan. So I will just take you to that, which is specifically not excluded. Not specifically excluded from the preview. Government participation in ownership by entity excluded. Government grant covered in 41 excluded from 20. Government assistance from the form tax benefits excluded. There's no visa. But there are certain government assistance other than tax benefits. What is that? We'll see. Forgivable loan from the government. Now look at this. What is forgivable loan? So I give a loan, it has to be repaid. Okay. Now for your information, the first forgivable loan was given by VP Singh. Okay, our honorable Prime Minister of past Prime Minister, former Prime Minister. So he was the first to actually start this concept called forgivable loan or agree loan that will be forgiven. So then our former Finance Minister Chidambaram, okay, he actually announced a 60,000 crore loan waiver. VP Singh announced a 10,000 crore loan waiver. So these are all classic example for forgivable loan. Forgivable loan is a government grant. So now please answer this question. Forgivable loan is not specifically excluded. So that means forgivable loan has to be repaid. Loan doesn't come under IndAS 20. But once it is forgiven, it is a government grant. So 2D. Now coming for the definition. Very, very important definition, guys. Look at this government grant, government assistance. Okay. So these are all the definitions of government. Government agencies, similar bodies. This is the definition of government in CGST Act. This is the definition of government in General Classes Act. So, and Article 53 of Constitution. These are all the many things which I have actually given a reference to. Okay. So many references are given here with respect to government. Okay. Now come to government assistance and government grants. Please look at this. Government assistance is action by government. Okay. To provide an economic benefit specific to an entity or range of entity, qualifying under certain criteria. Oh, what is this then? Then what is grant? Grant is assistance by government. Oh, here assistance by government. So what brings both separate? Okay. Here transfer of resources. Please understand, transfer of resources means money can be transfer of resource, land can be transfer of resource, some resources other than it can be stock or it can be in the form of okay. So in Tamil Nadu government there are various schemes. Every state government they have various schemes. So they will give Mudalamaitcher, Amma Thittam, like that they will give Tirumana Thittam. So they'll give a thali, they'll give the various household items and all they'll give. So transfer of resources. Okay. So please understand, assistance by government in the word transfer of resources. So transfer of resources is the catch here. But here, there is no transfer of resources. Provide economic benefits specific to an entity, qualifying certain criteria. This qualifying is very important. So now look at this. Transfer of resources with certain conditions. Relating to conditions is different, qualification is different. You qualify certain criteria, you are given a benefit. Now, example I'll give. Okay, I'll give an example. Look at this. I'll give you a para number. Please come to annual report. Yes, this is the MRPL annual report. Okay, so Mangalore Refinery, Petrochemical Limited. This is also, and also ONG is also there. So ONG is also I'm going to share with you, and MRPL also. Almost, because ONGC below that only MRPL will come. Okay. Now please look at this. The company also operates in special economic zone in Mangaluru. Okay. Accordingly, is eligible. Now come to the definition. Okay. Now come to the definition. Is action by government designed to provide an economic benefit specific to an entity, MRPL, or range of entity in all the companies in that special economic. So qualifying certain criteria. Okay. Now, what is that? Eligible for certain economic benefit, such as exemption from GST, exemption from customs duty, exemption from excise duty, exemption from service tax, exemption from VAT, exemption from entry tax, which are in the nature of government assistance. These benefits are subject to fulfillment of certain obligations by the company. There is a certain, please look at this, qualifying certain criteria. So government assistance for the purpose of this standard does not include benefits provided indirectly through action affecting general trading conditions. So we will reduce the rates, tax rates we will reduce. We will not impose tax for the next 3 months or 6 months. Is that government assistance? No. Okay. So such as provision of infrastructure in area development or imposition of trading constraints on competitors. So these things are not government assistance. So government assistance means action by government specific to an entity or range of entity qualifying certain criteria. So that is where this MRPL distinction. Now I'll also show you the same similar in ONGC also. This is ONGC. Same paragraph. This is in page number, okay, page number 496. Look at this. In respect of subsidiary MRPL. Look at the same. They are connecting. So ONGC is not getting any government assistance, but both of them are getting government grant. I'll come to the government grant a little later. Company also operates in SEZ, etc. Same paragraph. Okay. Both in what do you call it as ONGC and MRPL. Both. Okay. Now come this. What is the action by government designed to provide an economic benefit specific to an entity? Government assistance. Okay. Then what is government grant, guys? It is transfer of resources to an entity in return for compliance with certain conditions. What is in return? You have to, I will give you land. You have to give the produce. 50% produce you have to give. 50% produce you take. Just giving an example. I'll give you land, you give. So that is a government grant. Sometimes in compliance with certain conditions, I'll give you Institute of Chartered Accountants of India. They got government grant. What? In the form of allotment of land. In the form of allotment of land. So the land allotment, is it a grant? In what form it will be a grant? Please wait for some time. I'll come for that measurement part. That is the place. For example, Nellore branch of ICAI. Nellore branch of ICAI, they have got the land allotted on the national highway. Actually, it is a 2-acre land. Total cost was 2 lakhs. But the market value will be close to some 1.5 crores or 2 crores. A very big land. So only for 2 lakhs they have given. Now, can we call this as a government grant? Now, how to record it in books of accounts? How to recognize this book of? So please wait. I'll come to this question. So now come to fourth question. What are the assistance by government in the form of transfer of resources in return for past or future compliance with certain conditions? relating to operating activity. So that is not support, aid. It can be either GG or GA. GG means transfer of resources. GA means provide an economic benefit. Provide an economic benefit. So because you are qualifying certain criteria, these two are very important words. You get an economic benefit because you satisfy certain criteria. Special economic zone. So we have various new, there will be a new area that will be developed. So you go there, you establish. So we'll give you that support. So that is called government assistance. Of course, government support, government aid, these are all synonym words. Okay. So it is 4A. Now come to this. A government grant may take the form of, now coming to a very important paragraph. Come to this para number 23. Very important question. There are many case studies I want to discuss, but I'll come later. Now, this is non-monetary government grant. Okay. So now, I was giving the example of Nellore ICAI. Now, sometimes they will, I'll just share with you the paragraphs of MRPL. Okay. So look at government grant. So there are many government grants are not recognized. Now, I'll share with you some examples of government grants that has been given. Look at this. During the year 1617, TAPTI A series facilities which are part of the assets of PMT joint operations surrendered by the JO to Government of India as per the term of JO agreement was transferred by Government of India to the company free of cost as its nominee and recorded as a non-monetary grant. Okay. So this is TAPTI is actually one river belt. Okay, one river bed. Okay. So that the facilities which are part of the assets of PMT joint operation surrendered by the JO to the Government of India. Okay. So joint secretary and joint as per the terms of JO agreement. Okay, joint agreement were transferred by Government of India to the company free of cost as its nominee and recorded as a non-monetary grant. So during the year 1920, the company opted to recognize the non-monetary grant at nominal value and recorded the facilities in accordance with IndAS 20. Now, they have given a very big facility at free of cost. Free of cost. Now, how would I recognize in books of accounts? Come to this question. A government grant may take the form of transfer of resources, such as land, other resources. In these circumstances, it is usual to assess the fair value and to account both grant and fair value. So that means if it is 2 crores, 2 crores will be on the asset side, 2 crore will be government grant. Okay. Okay. Now, out of 2 crore, you paid 2 lakhs. Okay. So the balance is only 1 crore and 98 will be government grant. An alternative is sometimes followed to record both asset and grant nominal amount. Now, in this case, have they recorded at fair value or nominal amount? So they have recorded at nominal amount. So same is the case even with MRPL also. Look at the government grant. Government grant based on the audit. This is amortization of government. Look at this. Revenue from export incentives, government grant. So they are also government grants. Some of the government grants, how they measure, especially non-monetary government grants. I think it is, you are able to see this. I will show you one more. Okay. The benefit of a government loan at below market price, the interest-free loan is recognized. So the benefit of a government loan below market price is treated as a government. This is another example. So I will come for this also. So many government grants are here. Amortization, government grants. Yes. So I'll just take you to this question and I'll finish it. So a government grant may take the form of a resource of a non-monetary grant such as land, etc. And it is usual to assess the cost of the monetary and to account both grant at that. Now, usual to assess. This is where you have to take you have to be very careful. Now, please come to this paragraph. Okay, in these, it is usual to assess fair value and record both grant and asset at fair value in balance sheet, but alternative only nominal. So therefore, in the my disclosure, I have to make it very clear. No, I am not accounting at fair value. I am taking the alternative, the option given to me in para number 23. That option I am exercising and I am accounting at nominal value. Nominal is the cost only. Nominal amount is what? Cost. So I will not go for valuation. Otherwise, I have to go for. So cost is not the answer. It is nominal amount. So nominal amount is the cost. Okay. But nominal amount will be the cost. Only alternative you are chosen. Otherwise, usual is only fair value. So 5C. So please understand, this question is very, very tricky. Market value is not the answer. Cost never considered at all, because cost, another avatar of cost is called nominal amount. Okay. Nominal amount is cost only. So it is only fair and nominal. So usual at fair value. Alternative is nominal amount. Okay. There are two broad approaches to accounting for government grant. Very good. Now, I want to make this point very clear to all of you. See, please look at this paragraph, para 13, especially. So there are two broad approaches. One is called capital approach. Okay. So the capital approach, grant is recognized outside P&L. So it will only be in balance sheet. An income approach, grant is recognized in P&L over more than one period. For example, there is a government grant, means there will be a condition. So I'm giving you a land, okay, or I'm giving you an interest-free loan. I'm giving an interest-free loan. So, or concessional interest. Okay, concessional interest. So then, what is the condition? I have to produce and I have to deliver it to government. So then there will be a period. So this interest-free loan is for a period of 5 years. So 5 years later, you have to refund the interest. That means principal. You have to refund the principal amount. Interest you need not pay. But there is a notional interest portion is there. So that notional interest portion will be your government grant. And that government grant, you will be amortizing over a period of maybe next 5 years. So by in P&L account. So that is your income approach. So both the approaches are acceptable. Now in capital approach, there will be an asset and there will be a grant. And asset also will be reduced to the extent grant also will be reduced parallelly. So that is what we call it as a capital approach and your income approach. So let me take you to certain questions here. Which are the two broad approaches? Cost and market wrong. Income approach, cost approach. Capital approach, income approach. Income approach. See, market approach, there is nothing called market approach. So ignore that. A, market approach. D, market approach gone. And B and C. Income approach, cost approach. Capital approach, income approach. There is no word called cost approach. Okay. So it is only the, this is 13. This is 13. So you have only capital approach and income approach. So there is no cost approach or market approach. Okay. Now please look at this. This is a classic example for your capital approach. There is a company which establishes solar panel, which is 1 crore, useful life is 10 years. The depreciation is on straight line. The government gives 50 lakhs as subsidy. How the grant can be realized? Okay. So one way is set up 50 lakhs as deferred income and it will be crediting 5 lakhs equally over P&L account. Alternatively, deduct 50 lakhs from the cost of solar panel and only 50 lakhs will be there. So second method is your capital approach. First method is your P&L approach. Okay, otherwise called income approach. So I'm sure both are clear to you. Now I'll take one more question. Yes, look at this question. On 31/12/2013, an asset is having a carrying amount of. So question number 6, answer is C. Okay. So question number 7. On 31/12, asset is having a carrying amount of 1 lakh in balance sheet. Grant is 60,000 is received. Okay. So which is payable in next 3 years, repayable in next 3 years. So it is a loan. The grant is shown as deferred income. On repayment of the grant, the carrying amount of asset will be what? Okay. So on repayment, now the grant is worth 60,000 is received, which is repayable next 3 years. So if it is capital approach, okay, if it is capital approach, your asset will be only 40,000 and 40,000 you will amortize over a period of a year. And what will be your carrying amount at the end? It will be nil only. It will be nil. So either it is the asset approach, the capital approach means you net it, or the grant you have to keep it separately and amortize over a period of years. Okay. In both the cases, if it is amortized grant, then that is when income approach. 1 lakh will be amortized over a period of. Grant will go to income, 1 lakh depreciation will go to P&L. Or netting means 40,000. The 40,000 will be depreciated over a period of time. And repayment of the grant, carrying amount of asset will be 0. Okay. So definition of government grant excludes. We already saw this. Where is it? The government grant excludes. This is your government grant. So what it excludes? The government grant excludes. Okay. They exclude that form of government which cannot reasonably have a value placed upon them and transaction with the government which cannot be distinguished from normal trading transaction. So now answer this question. Exclude certain form of government which cannot reasonably have a value placed upon them. Certain government which can reasonably have a value placed upon, which cannot, which can. If you have a value placed upon, then it is a government grant. Now, what is the word here? Which cannot reasonably have a value placed upon them. You cannot value it. Okay. Though they exclude those forms of government assistance which cannot reasonably have a value placed upon them and transaction with government which cannot be distinguished from the normal trading transaction of the entity. Now, what kind of government grant where it is difficult to measure? Okay. Say, for example, they are giving some rights to, okay, you people, I am giving you certain rights to actually go and do a business there. So that is a government grant will be in the form of a transfer of resource. Transfer of resource is the right also. Now that right has to be measured. Sometimes you cannot measure it. Okay. Certain of the government has which cannot reasonably have a value placed upon them. Or you have to engage a registered valuer and what is the value for it. So especially if it is, does it have a commercial substance? What is commercial substance? Can you sell that right? No, you cannot sell. So that is a problem. You cannot measure it. See, normally, how will you measure intangible asset? It will have a future benefit will be there. It is transferable. It is identifiable. So all these terminologies are. It cannot be done here. So therefore, it is government. It is exclusively for them for that period, 3 years, 5 years. It is only for their upliftment. So certain forms of government which cannot be reasonably valued. Certain government which cannot accurately have a value. There is no accurate. There is only a word called reasonably have a value. Okay, reasonably. So which cannot have a value placed upon them. So reasonably is your answer. So 8A. Okay, good. So now I'll take one more question. If government grant is dash, an enterprise should recognize a government grant as income only when and only when conditions attached to the government grants are met. So I'll just take you to para number 7 and 8. Look at para 7. So government grants shall not be recognized until there is a reasonable assurance entity will comply with the condition the grants will be received. Then only you will bring. For example, government is giving a GO. So we will give you 10 lakh rupees. Okay. Oh, you have found a solar. You are going to implement solar. We will give you 10 lakhs. Now, will you recognize the entity will comply with the conditions? So government grant has some condition. You will comply and grant will be received because GO has come. If GO has come and you are ready to comply with the condition, then recognition books are even though you have not received it. Because receivable. Okay. If government grant is, look at the word. Okay. So government grant include non-monetary grants at fair value shall not be recognized unless there is a reasonable assurance. Okay. So if government grant, so I'll take you to one more paragraph. So government grant is not recognized until there is a reasonable assurance that the entity will comply with the conditions. So what is reasonable assurance? I have the resources, I have the manpower, I have all the technology. So then you can recognize it. So grant will be received. You will comply with the conditions. When you will comply? Only when you have a reasonable assurance. When you don't have a reasonable assurance, you cannot. Okay. So if the government grant is conditional, okay. So if the government grant is conditional, okay. So where is it? Where is the question? Sorry for 10th question. So if the government grant is conditional, an enterprise should recognize the government grant one and only when the condition attached to the government grant is met. So your answer has in the question itself. Look at the word conditions. It's already there. So 10A. Good. Now coming to the next standard property, plant and equipment. Now I want to make one observation here, guys. This standard is 79 paras. Okay, 79 paras. And you have a younger brother to IndAS 16. That is called IndAS 38. IndAS 38 is intangible assets. And tangible assets is 16. Intangible assets is 38. And of course, 38 will run for 120 paras. But that is intangible assets run for 120 paras. But tangible assets will only run for 79 paras. But majority of the prescription of 16 and 38 will be similar. So therefore, when you read 16, read also 38. Okay. And remember, friends, I'll be doing a case studies on 5th evening as well as 6th morning, covering maximum all the standards. Okay, all the standards. But I'll presume that all of you are prepared and you come for those case studies. Anyhow, every case study I'll explain with respect to the paragraph, the context, and then only I will conclude with respect to each case study. But you, unless and otherwise, reading has been already done. So the best part of Indian accounting standard is read, understand, take notes, your own notes. That only will give you the clarity and comfort on the subject. Okay. So now let me take you to IndAS 16. Okay. This is 79 paras. Okay. I want to make one more. Okay. So 16 is actually, in Tamil, we call it as Endrum Margandeyan. So there was a Saint Margandeya. So he said to have been given a boon, okay, that he will always be 16 years. Okay, he's immortal. Okay, always 16. Okay, and you have a very interesting world over. There are certain countries like Germany, Belgium, Switzerland, Austria, Portugal. The legal drinking age is 16. Okay, and in Argentina, Austria, Brazil, Cuba, Ecuador, legal voting rate is 16. It is not 18. So these are all some very significant things about 16. And in India, 1 rupee was 16 anna. Okay, that is why hexadecimal is very, very a powerful number. Okay, so very interesting thing. And in United States, they say sweet 16 because 16-year-old girls in United States, they celebrate that. Okay. So now coming to India 16, let me take you to first question. Okay. So this is your question number 1. As per IndAS, actually, you have para number 6, which has a lot of definitions. Look at this, para number 6. This is your para 6. So in this paragraph, please look at this. The same definition what we discussed in IndAS 41, the bearer plant, is also being defined. Why? Because bearer plant is a property, plant and equipment. Okay, good. And the carrying amount, cost, depreciable amount, depreciation, entity specific value, fair value, impairment loss, and 9th definition is property, plant and equipment. And when you compare these definitions, IndAS 38, majority of the definitions will be there. Recoverable amount will be there. Instead of PPE, intangible asset will be defined there. Residual value will be there. Useful life will be there. And fair value will be there. Impairment loss will be there. And instead of depreciation, it will be amortization. But depreciable amount will be there. The amount what you will be amortizing, total we call it a depreciable amount. So instead of depreciation, they have an amortization. That's it. Same concept of carrying amount, cost, depreciable amount, amortization will be defined there. So many commonality will be there between IndAS 16 and IndAS 38. Okay. Now coming to our question here, as per IndAS 16, okay, the principal issues in accounting for PPE are, okay. So what I will do, I will take you to para number 1. So this is the principal issue. Why this standard? Okay. The principal issues in accounting for PPE is recognize the asset, determine their carrying amount. What is carrying amount? So what will be your closing balance? And the depreciation charges you have to debit to your P&L account. And impairment losses to be recognized. And for your information, impairment loss will IndAS 16 will give the answer no. It will say check for impairment and provide for impairment loss as per IndAS 36. So therefore, I'll just share with you. Look at this. So I'll just share with you the impairment part. Look at impairment. So para number 63, impairment. I'll take you to the impairment. Impairment. So compensation for impairment. Look at IndAS 36. So the impairment law should be recognized as per IndAS 36. So this standard says if you have an asset, there will be an impairment possible. So, but how do you measure impairment? How do you recognize that in your books of accounts? IndAS 36 will say. But disclosure says impairment laws recognized in P&L as per IndAS 36, you have to disclose. So quite a connect with the 16, 36, 38. All these are connected. Okay. So now come to this paragraph. So para number 1. So what para number 1 says? This is the purpose. The purpose, the principal issues of accounting is recognize the asset. You need to determine their carrying amount, closing balance, depreciation, and impairment loss. So these are the 4 items. Now come to this question. So the principal issues in accounting for PP are except recognition of asset is there, determination of carrying amount is there, depreciation charge is there, determine whether an item of PP is impaired, determine. This standard doesn't tell you how to determine. Please look at the para once again. Okay. The determination of carrying amount of impairment loss is given in the objective. But how will you determine? It says go to 36. So this standard doesn't determine PP. This standard will say disclose impairment asset. That's all. So therefore, please be careful. Okay. So D is your wrong answer, which is the right answer. IndAS 16 does not apply except, that means it is applicable. Okay. So again, I'll go to para number 3. This standard does not apply to PPE, which is held for sale. So go to IndAS 105 because it is retired from use. Biological asset other than bearer plant, because bearer plant will come under IndAS 16. We saw even Tata Coffee Limited's balance sheet yesterday. So that will consider bearer plant as a biological asset coming under IndAS 16. But this standard applies to bearer plant, but it does not apply to produce on bearer plant. So produce will go to IndAS 41. Look at. So PPE classified held for sale, not applicable. Bearer plant applicable. Produce on bearer plant, not applicable. So PPE classified not applicable. Produce on bearer plant, not applicable. Mineral rights, mineral reserves. Why it is not applicable? Because you have a separate standard for it. There is oil, natural gas. There is a separate standard and similar regenerative resources. So this standard applies to PPE used to develop and maintain assets. That is why I want to show you the ONGC. Look at ONGC. So in ONGC, you have the property, plant and equipment. The property, plant and equipment. I'll just show you that note here. So where you have assets relating to the exploration, but the cost relating to exploration doesn't come under. So there are certain machines we are using for exploration. So I have the PPE here. So where is the property plant? Very big, very big. This is the name of the entity, property, plant and equipment. I'll bring. So it's a very big asset. Capital work in progress. Look at this. Amazing. Quite a very big. CW IP itself is so big. The right of use of assets is so big list. Property, plant and equipment, right of use of assets is very big. Look at this PP. Relevant item in the balance sheet. Okay. And line item. Look at the list, guys. My God. So look at this. Carrying amount. Freehold land, building, plant and equipment, furniture and fixtures, other equipment, vehicle, ships and boats. So, so this is your so accumulated depreciation. Now they use a word called deemed cost also. So I'll come to this particular word, deemed cost, a little later. Where the cost, deemed cost will come. Okay. So sometimes when there are acquisitions, okay, there are transfers, because ONGC is a very big entity and there are so many subsidiaries. So there are various transfers that will come from another entity to this entity. So how I will recognize in books of accounts? So the word deemed cost will, because you will measure at fair value and fair value will be deemed to be the cost. Okay. Because you don't pay anything because you are a government entity and there is a direction from the government. That company is closed. This machine is very good. You take it. So based on the GO, how will I bring it in books of accounts? It is free of, you are not paying anything. So the deemed cost will come. So quite an interesting subject is this IndAS 16. So IndAS 16 does not apply except bearer plant. So that means IndAS 16 applicable to bearer plant. Okay. So 2B. This is a very, very, very important line. Okay, very important line. I'll just take you to para 15. Look at para 15. An item of PP that qualifies for recognition, okay, shall be measured at cost. This is one place where Indian accounting standard is real desi. Real desi. I'll tell you, real desi. Oh, fair value is not there. Never. Never. So your property, plant and equipment has to be initially, so actually a measurement at recognition, initial recognition at the cost only. So when you are bringing it in your books of account, the journal entry, the first journal entry will be at cost only, how much you actually paid. Okay. Now answer this question. Item of PP that qualifies for recognition initially shall be measured at cost. Now where fair value will come? Only for revaluation. Actually, this fair value takes a various avatars. Different avatar it will take. In IndAS 16, fair value takes the avatar called revaluation. Okay, so revalue. Okay, so revalued amount we call it as fair value. Okay, so the item number, question number 3 is 3D. It is always measured at cost. For measurement of an item of PP, examples are directly attributable cost. Now you say cost. Now what is this cost? Okay. Please look at this. What is cost here? Look at this definition cost. Cost is cash or cash equivalent paid or the fair value of other consideration given to acquire an asset. This is where I told you. Sometimes the asset would have been transferred from somewhere. So I would not have paid anything. Then how will I recognize? So it is the fair value. Okay. So, and the other side, I have to call it as government grant or some other thing. Okay. Because it is given by government. So now, what is the cost? Look at this. So the cost is, okay, initial cost. Items of PP that may be acquired, these are initial cost, subsequent cost. Okay. So what are the elements of cost? Very important. Okay. Purchase price, cost directly attributable to bringing the asset. Now what is cost directly attributable? Is separately given. These are the attributable direct cost. Employee cost, which is for construction, site preparation cost, delivery cost, handling cost, assembling cost, testing cost, and also the related professional fees. All these are directly attributable cost. Now answer this question. Okay. So for measurement of an item, examples of directly attributable cost are except site preparation cost is there, professional fees is there, cost of employee benefits is there arising directly from construction, that is also there. Administration general overheads are not directly attributable cost. We just now saw it is not here. But he say examples occur that are not cost. Which are not cost? Administration general overheads. It doesn't form part of it. So the word cost is a very, very important terminology. So 4B is not a cost. Now bearer plant. Now how bearer plant is accounted for in the same way as, okay, which items of PP, fair value of PP, cost items of PP, self-constructed item of PP, or fair market value before they are in location and condition necessary to be capable of operating in the manner intended by management. Now, what is a bearer plant? For example, yesterday in Tata Coffee, we saw the Robusta coffee plant, Arabica coffee plant. Now, what is the cost for it? Is it fair market value? Is it fair value? Is it cost? Okay. So, I am taking you to a very important paragraph. Look at this paragraph. The cost of a self-constructed asset determined using the same principle of a self-acquired asset. Okay. Now, how bearer plant will be done? Bearer plant is accounted in the same way as self-constructed asset. Self-constructed asset of PP. Now, what is self-constructed asset? That's what is given here. So, if an entity makes self-constructed, that means I don't buy outside. For example, in Ashok Leyland, they will make tools. Tools means it is actually a machine. They don't buy machine from outside. They are all engineers there. So they have a lot of they have a lot of material there. So they themselves will take all the material. They'll prepare a drawing. They'll develop a robot. They'll develop a machine. Then what is the cost of the machine? The the cost of the asset is usually the same as the cost of constructing an asset for sale. Okay, so therefore any internal profits will not be there. It is only cost. So what are the material costs? What are all the labor costs? What are all the overhead costs? So you need to arrive at the cost. So it has to be measured. It has to be measured uniquely. Same is the case with bearer plant. So what are all the costs you have actually incurred for bringing up that particular? Okay, so that you have to capitalize it. You cannot charge up to P&L. Very good. So now answer this question. So bearer plant are accounted for in the same way as self-constructed item or BP. Okay, it cannot be fair value, it cannot be cost, it cannot be other things. So self-construct. Very, very important. Very important. Certain factors are to be considered into account while determining the expected useful life. Now I want to take you to para number 56 and 57. Now this is what your depreciation is all about. Okay, so look at this, guys. The useful life and economic life, both are different actually. So I'll just come to this question and I'll go there. Certain factors are to be taken into account while determining the expected useful life. Okay, under IndAS 16 property, how does useful life of an asset differ from economic life? So I normally give the analogy of an Indian woman. Okay, so Indian men and Indian women, they have a lot of differences there. What is it? Indian men, they have only one house, that is parents' house, or maybe a period of time they will buy their own house or develop their own house. So, but as far as Indian women is concerned, they'll have two houses. So one is their parents' house, another is their husband's or in-laws' house. Okay. Now, especially when the Indian women will be in their parents' house, they'll say, okay, your economic life is actually 70 years, 80 years, 100 years you will be there. But the useful life in my in your parents' house, so in my house, okay, as a daughter, I will keep you like a princess. So till 20, 22, 25, okay, that will be the useful life. But actually, the economic life is not 25. Economic life is 70, 80, 100, 120. So please understand this. So therefore, certain factors are to be taken into account. So that is same case with the property, plant and equipment. I buy a machinery. The machinery life will be 20 years or 15 years. But I am going to use it for what? I am going to use it only for 7 years. I am going to use it for 7 years. How does a useful life? So please come to this. There are very, very interesting para. So the useful life of an asset is defined in terms of asset expected utility. Surely it will be useful for 15 years, but I'm going to use it only for 7 years. The asset management policy may involve the disposal after a specific time. Therefore, the useful life may be shorter than economic life. Very, very important. So the estimation of useful life is a matter of judgment based on the experience of the entity. So now answer this question, guys. So useful life is greater than economic life? Okay, wrong. Because economic life is only greater than useful life. Economic life greater than useful life? Correct. Actually, B is correct. But let us go. Economic life useful to economic life is equal to useful life? No, we cannot say that. Useful life of an asset may be shorter than economic life. Maybe. Now, why the word may? Actually, B is a very generic thing. Please come to this para. Okay. Therefore, useful life may be shorter than economic life. Now, why the word may has come? Please understand one thing. I may buy a machine. I may use it for the entire economic life also. 10 years means 10 years I use it. So that is why economic life, useful life can be same. C is also correct. Now, no, I'm not going to use it for 10 years. I'm only going to use it for 4 years. Wow. Then useful life, economic life is greater than useful life. B is correct. So that is why C and B both are correct. So then that is why useful life may be shorter than economic life. Why? What is the other thing? May not means what? Equal to. If maybe I'm going to use it for full. So that is why this is where the judgment is there. Okay. And even in the audit report, I repeat, even in the audit report, okay, there is a key audit matter. So the key audit matter, they'll mention This useful life and all, these management, they have taken their own stand. They say we are going to only use it for this much time. So therefore, useful life is a judgment, is an estimate. So we have not audited that. We have only taken the explanation from the management, and we are satisfied with that. So like that, only the key audit matter will be there. So therefore, so lesser the useful life, higher the depreciation. Higher the useful life, lesser the depreciation. It will have an impact on profit. So therefore, please understand this, very, very sensitive. So you will feel all the answers are correct, but the correct answer is D. Okay, correct answer is D. Now come to the spare parts. I'll now come to the spare parts. Quite an interesting paragraph. Come to this spare parts. So I'll just come to this one very interesting paragraph I want to show you. Look at this. The spare parts, standby equipment, and servicing equipment are recognized in accordance with this IndAS when they meet the definition of BP. See, normally, spare parts, you will capitalize it. Standby equipment, you have a generator, you have a standby generator. So, standby generator, is it, you will capitalize it or not? So, you will capitalize it only when this para number 7 is satisfied. There is a probable use and cost can be measured reliably. Okay, otherwise such items will be classified as inventory and you will charge of you have to only treat it as an inventory. So and you use as a consumable. That's it. So it will not be capitalized. So spare part, standby, servicing equipment will be considered as PPE only if it satisfies the definition of PPE. That means it will have a future life. There will be benefits derived from it. Cost can be measured reliably. So it's a very, very important question. So spare parts, standby equipments, neither classified PP nor inventory, wrong. Are always classified as PP, that is also wrong. Are not recognized in accordance 16, but classified as inventory, that is also wrong. Are recognized in accordance with 16 when they meet the definition of PP, else it will be classified as inventory. That is where you need to understand. So please appreciate the wordings. Please understand business. So wordings will be clear only when the business is clear. Okay, and friends, I want to make one very important point observation here that there was no feedback I could get from the blog, so I thought nobody is interested to download the material. So from today onwards, material I will not be uploading in the blog. So hope so you are comfortable with attending the session. So thank you very much. And before we request Sampath Kumar ji to give his closing remarks, can we request few of the participants to share your thoughts, please? Ajay Joshi, anybody else who wish you raise your hands, I'll unmute you. You can share your thoughts. So yes, so Tejaswini, I'll just unmute Tejaswini. Satyanarayan, also I'll unmute. We have Madhuvanti. We have Chidambar. Yes, good morning. Go ahead, please. Good morning. Yeah.
Yes, sir. So I'm Madhuvanti Chadaparan from Chennai. And this kind of session for IndAS is totally bringing a new knowledge and interest to start with IndAS, because we all finish our CA from the AS kind of era. So migrating into IndAS needs some kind of warm-up, kickstart kind of session, and your session being really useful so that we don't feel much away from the trend of getting inside IndAS. And so far, not doing any stat audit for an listed company or a big private company, no requirement for IndAS was required for me personally so far. But of course, your session is very much of an eye opener, so that we can also be on par with others, at least to know what's the IndAS and talk about few A's. So thanks to you, and we have been downloading your material, sir. In the blog as well, I scrolled till the end to find any place to provide feedback. The page was kind of scrolling down. I couldn't find any sections to put up a proper comment. That is why I couldn't do it yesterday. I downloaded all the materials for yesterday, day before yesterday, including the AS links that I have provided to the institute's PDF links. Everything were downloaded. So I please request you to proceed with the same kind of motivating, us, and please upload today's PPT and other materials as well.
Okay. Thank you very much, Madhuvanti.
Yes, sir. Thank you.
So let us listen to Tejaswini Ram, Satyanarayan. Yes, please go ahead. Good morning.
Morning. Thank you, Raju sir, for
Ah,
sharing such your knowledge and expertise with us today. Uh, your your insight on IndAS have been insightful and informative. I am sure we audience gain a lot of value from your presentation. Thank you so much.
thank you. Thank you. So, how about Tejaswini Chidambar? Chidambar Chikaru. We have Radhakrishnan. Yes, Mr. Radhakrishnan. M. Radhakrishnan. Good morning. Okay. So, maybe they can connect. You're able to. Okay. So, let's listen to our Sampath Kumarji for his closing remarks.
Dr. Raju and my dear friends, today is one more knowledge feast with respect to the standards covered today. Dr. Raju, you are doing a human service for the cause of our professional brothers and sisters. My humble request, you kindly share the background material or your PPT presented with a humble request that those who are responding, they may be sent with the help of the coordinator. And equally, I humbly request our participants, just the way you have put it in the other days, I request each of the members to add one line, one word, subject to your convenience, about your reflection suggestion so that it can be refined for the next session and future things. Thank you very much, Dr.